everybody, this is a video about whether an economy has a budget deficit or surplus, and also about whether they have a national debt and what's happening with that. So also the difference between each of these three things. We know already that fiscal policy is about the taxes that are paid within a country and about how the government spends that money. When you're looking at a budget deficit or a budget surplus, you're looking at the difference between how much money is coming in from taxes and how much money is going out from the government spending money. And you're looking overall at what your position is. And if you have a budget deficit or a budget surplus, we look at this annually. So each year, we see whether there's a budget deficit or a budget surplus. We have a budget deficit, which is a bad thing usually. This means that your tax revenue that the government is collecting in is less than the government spending. So overall, more money is going out than is coming in, and you end up with a budget deficit in that year. If, however, you have a surplus in an economy, this means that the amount of tax revenue that you're collecting in is more than the amount that the government are spending in that year. So for any economy at any time, you can look to see if they've got a budget deficit or a budget surplus. We then have something different, which is the national debt. The national debt is something that an economy owes to other countries. This is the total amount of debt that they have to other countries. This is ongoing, or you could say it's cumulative. So it builds up and up and up and up potentially. So if in one year we had a budget deficit of 100, if in the next year we have another budget deficit of 50, this means that our national debt is now, if these are the only 2 years we've ever had, 150. If the next year there is another budget deficit of 20, you just add this on to get your new national debt, which will now be 150 plus 20, which is 170. If in a year you now had a budget surplus, they could use some of this budget surplus to pay off some of the national debt. So if you imagine that they had a 70 surplus and they used this to pay off some of the national debt, the new national debt now would be 100, because it's 170. Take away the 70, so you're left with 100. And you can look at economies to see overall what's their national debt position. Have they got a lot of money that they're owing to other countries? It's really important to know that if you're looking at national debt, this is cumulative. It's over time. It's adding up and sometimes getting smaller. Whereas if you're looking at whether you have a budget deficit or budget surplus, this is worked out annually. So each year, have you got a deficit or a surplus in that year?